Hey there, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions, form your own financial conclusions, and make your own financial decisions. This is Blockhead Traders for the week of November 3rd, 2024. And in this week's episode, it's just me, Sprocket888, and I'm going to talk to you a little bit about Daily Theta. Something that I try to keep and base my portfolio around, and how I'm going to go pick up some more Daily Theta, probably in the names of Team, INTC, and Ford. But before we hop to that, I want to give a shout out to our Discord, link in the description below. You can hop in there, say hello to myself, Viper, some of the other Blockhead traders. Love to hear what you're trading, love to hear what type of content you want to hear about. Also, you can find a link to thetagang.com/sprocket888 where I post each and every one of my equity trades, the good, the bad, and the ugly. This is also available in an audio-only format wherever you get your podcasts, so find us there, subscribe, and if you can't find it, let us know and we will get it there. But let's hop to this week's content. And in this week, I want to talk about Daily Theta. Daily Theta is something that I like to pick up in my portfolio with my strategy. And it's basically one of the cornerstones of my particular strategy is I like to sell time premium, banking on the very unique fact that all time premium decays to zero at the time of expiration. So I have a couple of things noted down here about Theta, and we're going to kind of run through them as I kind of explain what exactly is Theta and why is it relevant to the way that I trade options. Because Theta is one of the Greeks that is unique to options. There are many different Greeks in options. Theta is one of the Greeks and probably one of the most important Greeks. It's right up there with Delta. Delta and Theta are the two Greeks that really are the most important when you are either buying or selling or just trading in general options. So let's take a look here at some of the stuff that I have jotted down. And want to start with just kind of that reinforcing of what Theta actually is. Theta is the measurement of time premium in an option. So remember, options are a time-bound instrument and they do go to zero. They basically expire. And when they expire, they're absolutely worthless. And Theta is the amount of premium that is associated with the length of time remaining in the option to expiration. So for example, an option that has 45 days before it expires will have more time premium or more Theta than an option that only has 21 days left to expiration. And that will have more time premium than something that's only 14 days to expiration. So the closer you get to expiration, the less and less time premium that is in that option. And like I mentioned, at the end of an option's expiration, that value is always zero. Now, it's not quite a linear decay to that zero mark, but in this episode, we'll kind of just assume that it is. It actually accelerates the faster, or the closer you get to expiration, the faster that Theta comes off of that option. And like I mentioned, it is the value of time premium left in the option. Now, assuming that everything else is absolutely the same, that is exactly what you would see the value of that option change each day. So if the underlying didn't move at all and none of the other Greeks influenced it, if something had $20 in Theta on the first day, the day after that, if it was something like a $1 decay, in that Theta, that option would be worth $19. And then the next day after that, it would be $1 less. And the next day after that, it would be another $1 less. So you can see in my strategy of selling options, that value or that Theta component is constantly decaying. And it is decaying by what's known as the daily Theta. So in my portfolio, I like to keep a very high Theta, a very high daily Theta, because that is basically how much my portfolio gains in value every day, because I have collected that money up front. And then when I want to close out one of those options trades, I have to buy back that Theta. But if I wait for time to pass, the cost of that Theta is less and less and less to close it out. And so when I look at my portfolio, whenever my Theta is low, I kind of go on the hunt for more Theta. And when I do that, I follow a lot of the same strategies of when I'm looking for earnings. I'm really looking for that extended volatility in the options And I'm usually targeting around a 35 to 45 days to expiration to pick up, because that's really where that theta decay starts to come off a lot faster. Once you get longer out, that theta doesn't come off as fast each day. Now, I try to keep what's known as a delta neutral portfolio. So I'm going to briefly touch on delta. Like I mentioned, the two most important Greeks are delta and theta. And delta is simply just the measurement of change of an option's value based on the move of the underlying. So for example, a 30 delta would mean if the underlying moves by $1, that option price, all things remaining equal, if they could, would move by 30 cents. A 50 delta would mean if the underlying would move by $1, the option value would change by 50 cents. And delta neutral basically means that your portfolio has effectively zero delta. Well, why is that important? Because in a true zero delta, it doesn't matter if the market goes up or the market goes down, because that delta represents how much does your options value change when you get $1 move in the underlying. So a delta zero would move $0 in value based on $1 move in the underlying. And so that's important, because if we can take out that price movement from the equation, we can really focus on that daily theta, or that time decay. Now, maintaining a delta neutral portfolio is actually not, you can never really keep delta zero, because as soon as something moves, your delta is no longer zero. And so it's a constant battle. So there's really a range in which delta really doesn't have a ton of impact on your value. And that's really what that delta neutral means. So that's important, because if my portfolio remains relatively neutral and delta neutral, it doesn't matter if the market goes up or goes down, the value as it pertains to the movement of the underlying doesn't change. But remember, I have theta. I have sold the theta, and that decays every single day that goes by. And then that is basically money that goes into my pocket. And so that's really one of the cornerstones of my strategy, is to sell that theta, keep the delta neutral, and then every day that passes, that goes into my pocket as locked in, and I can close them out. And so that's really the crux of what I'm trying to do in this move. Now, in my particular portfolio, it's really time for me to pick up more theta. And more theta is really just something to kind of reload as it decays. I wait till it decays to a certain level where there's not that much coming off of it every day. I close out the position, or when the position hits my price targets for premium collection, and then I go out and I look for something else to fill that gap. And I'm constantly looking for new daily theta to keep my daily theta up on my holistic portfolio view. So how do I look for this? Well, pretty much the same way that I look for earnings. And that's where I kind of want to pull up, because earnings can be used as that binary event for that immediate volatility contraction, but it also can be used as really a jumping off point when it comes to that theta decay. So you can kind of come out in time a little bit further past earnings, because earnings are going to have a good bit of volatility, which will bump up your time premium, bump up a bunch of the different factors of that thing. So when you look at earnings, you can kind of play them for the week of expiration, in which case you're really only targeting that volatility contraction, because your theta, there's not a ton of that stuff that's going to change that much, because you have a very, very short time to expiration. But if you take that same underlying that has a lot of volatility and you move out in time, because of that high volatility, there will be a lot more time premium associated with that. And so I just pulled up here real quick the screener that I kind of go through to look for earnings that are upcoming, and things that are elevated. I sort by that IV percentile. That's this column right here. And when I go down this column, I'm really looking at things that are up there above the 70% or so of IV rank, which means they're already elevated volatility. And I look for all the characteristics of earnings that you can hop back to previous episodes. And when I find some of that stuff, I drill into the particular options chain. And that's where I want to show you why you can look at the week of expiration, or you can kind of go out a little bit more to pick up this time premium if you're not really interested in that volatility contraction. And so what I want to call out here is I just pulled up Atlassian. So this is one of the underlyings that kind of hit my trigger that said, hey, this is a great place for me to pick up more of this daily theta. And so playing earnings, the earnings happen to be on this week of expiration here. You can see it's 127% volatility, which is awesome if you wanted to play earnings. But let's say you weren't looking for that short-term play and you wanted to kind of go out a few weeks to get a little bit more daily theta burn. You're going to want to stay in that 35 to 45 day range, and you want to balance, volatility numbers. And so you can see, go out a week and you're at 93%, go out another week you're at 79%, go out another week you're at 68%, and then you really kind of level off around this mid 50s%. And so for me and all of the things I want to kind of talk about today, I'm really targeting this November 15th week of expiration. Why November 15th? Well, one, it's a little bit shorter than I like. So normally when I'm doing this, I'm going to like 35 to 45 days. But you can see the next monthly is at 54 days, which is a little bit too far out. So 19's okay. And the other ones are weeklies. I tend to like to trade monthlies because they will tend to be more liquid. And so they're a little bit easier to close. So it's okay to look at weeklies, but for this example, I'm really looking at monthlies. And that's why I would be looking in here at this November 15th, which you can see is a nice balance between the 127% volatility for the earnings week versus the mid 50s here for kind of the traditional, if I were to go out to that December for that 54 days, 56%. So it's a nice kind of balance or medium in there. Not going to go into all the screening of the things, but basically I came up with three tickers, Ford, Intel, and Atlassian, as things that were good for extended volatility, looking at the next upcoming monthly expiration, looking at the next possible trading day. If we kind of look at this, we're going to call it roughly 15 days to expiration. So how do I figure out what these daily thetas are of these stocks and how much of this will it put in my portfolio here? So let's take a look at Ford. And so one of the other things that I didn't touch on here or didn't show in this is I look for an underlying that I'm okay to own if something were to go not so good on it or things like that. So anytime I'm selling naked options, I have to make sure that I'm okay with assignment. And for a lot of these here that I'm going to show you in the example, I had done this analysis and I'm okay, for example, on Ford to purchase Ford at $10.50 if it comes to that. Now, I happen to believe that we're not going to breach that strike. I'm not going to get assigned. I'm going to just milk the premium off of that. But it is a very real possibility that could be an outcome. And so if I look at Ford, because this is a directional move or kind of only selling options on one side, it's not a strangle, I'll typically kind of come up in my delta to maybe a 25 to 35 delta. So in this case, the 30 delta of Ford for expiration that's about 2 weeks out, which is the next upcoming monthly, is a 1050 strike, and I can sell those for about 35 cents. And so if I do 20 of those at 35 cents, I'll basically collect $700. Now, if we take that $700 over that 15-day period and just assume linear decay. Remember, it's not the theta will burn off faster the closer we get to expiration, but let's just assume that it's linear. That gives me a daily theta from Ford of $47 a day, which basically means all things considered equal, every day that goes by, I will gain $47 in time premium, or effectively my portfolio will increase by about $47 in value. And so, as you can see, this is really, going down to Intel, right? So Intel is another one of these things that I'm okay to buy this thing at $21, which is a 30 delta. I'm looking at 80 cents, 10 of those things. So I can collect $800 over 15 days. My daily theta would be $53. Now, let's say I did Intel and Ford. You can see you add this as 90, 100. Now, I'm at $100 in daily theta, which means every day that goes by, assuming I can keep my portfolio generally delta neutral, is I will gain $100 in value. And you can see this is exactly how I get that slow incremental growth out of the way that I sell premium. come down to Atlassian. So in Atlassian case, it's a strangle that I picked out at $7.60, selling two of those, collect about $1,500 over 15 days is about $101. Add that to the $100 in Daily Theta, and you can see I've added 3 positions, and the outcome of these 3 positions is roughly $200 in Daily Theta, which means every single day that goes by, my portfolio will roughly increase in value by about $200. That brings us to the end of this week's episode. I really just wanted to kind of introduce or kind of explain a little bit of the concept of the Daily Theta to you, as it is one of the cornerstones in my premium selling strategy. So I tend to holistically try to keep my portfolio in a delta neutral, which basically means market goes up, market goes down, the value of my portfolio shouldn't change or doesn't change. Because I'm constantly selling options and try to maintain that delta neutrality, one of the things that does constantly change every single day, no matter if the market goes up or down, is the amount of time decay that comes off, because time is always passing. And all of the options that I'm selling are getting closer and closer to their expiration. And when they get to their expiration, they will have zero value of time premium left in them. And that's really the crux and the cornerstone of my strategy, is to sell all of this premium, keep it delta neutral, so it doesn't matter if the market's going up or the market's going down. The value relative to the movement of the market doesn't change. But what does change is that time premium that's constantly coming off. And one of the instruments that I look at, or the meters that I kind of pay attention to, is what is my portfolio's daily theta. And I like to try to keep that daily theta as high as possible while the delta remains as low as possible. And by low as possible, I mean as close to zero, because you can carry a negative delta and a positive delta, but I like to keep it at delta neutral, which is a range. And if I can do that, that allows me, as long as that theta number keeps up very high, as every single day passes, that's the amount that my portfolio will increase every day. So as we come up in the upcoming trading week, I need to pick up more of the daily theta, and the way that I screen for that is really the elevated volatility as the jumping off point. I look at the charts, I look at all of the factors that go into that, just like I do for earnings, to figure out if this is something that I want to take as a trade in the upcoming week. Really, we got Ford, Intel, and Atlassian as 3 names that I believe I can put in my portfolio to pick up an additional $200 in daily theta with relatively minimal risk to the delta neutrality of my holistic portfolio. Hopefully this gives you something to think about, whether or not this is your style of trading or not. There's a lot of movement out there in the market these days, so hopefully you're able to find the things that excite you and that you're interested in trading. And I hope you're met with great luck. And remember, think outside the block.